Fox Studios in New York City, this is Maria Bartiromo's Wall Street.
And welcome to the program that analyzes the week that was and helps position you for the week ahead. I'm Cheryl Casoni. I'm in for Maria Bartiromo. We're just days away from the highly anticipated ABC News presidential debate next Tuesday. This may be the only opportunity voters get to see the two candidates square off ahead of the election. Vice President Kamala Harris and former President Donald Trump hitting the campaign trail hard this week, pitching their economic agendas before the big showdown.
My vision of an opportunity economy is one where everyone can compete and have a real chance to succeed. We will expand the tax deduction for startups to $50,000. It's essentially a tax cut for starting a small business. If you earn $1 million a year or more, the tax rate on your long-term capital gains will be 28% under my plan.
She will seek a tax on unrealized capital gains. Most people don't even know what that means. We have the lowest tariffs of any nation in the world, and we relentlessly punish our own companies for doing business in America. I intend to reverse this model and once again turn America into the manufacturing superpower of the world. And you know what? We deserve it. We've been helping other countries get rich at our expense for the last 50 years, and we will be bringing in billions and billions of dollars, which will directly reduce our deficits.
Both candidates claiming they'll cut regulations and get costs down, but whose plan will actually work for the American people. Joining me now, former White House Council of Economic Advisors Chairman Kevin Hassett and the People's Corporation Chairman and CEO and former Obama fundraiser Don Peebles. Gentlemen, it's great to see you both. And Kevin, I want to start with you and those comments coming from the former president at the Economic Club here in New York. He said things that to investors would be music to their ears: cutting regulation, getting rid of the EV mandate, maybe taking the corporate tax rate down to 15%. It's a 21% if that company operates in the United States. These policies, if implemented, would bring back the economy. Your reaction?
Right. Well, one of the things that's actually a benefit of President Trump sticking with the same values, the same things that he used the first time, is that we have a whole bunch of evidence about how that stuff worked the first time. And so by cutting the corporate tax and deregulating and having a more reciprocal trade policy, you know, we had 3% growth, 1% inflation, real incomes grew by about $6,000 per family, you know, lots of really good news. And so I think that President Trump had a very positive agenda that I think will have a big positive effect on the economy, just because that's what it did last time. And in fact, those who argue that this is going to somehow be stagflationary or something, which you see that was a report from Goldman Sachs, then they have to explain to me why it is that policies that worked so well last time aren't going to work this time. And if you start to dig down into what they're saying, that it's basically just partisan claptrap.
Well, now we get more numbers. And Don, we've also gotten this housing plan in particular from Kamala Harris, because obviously it is nice to hear her talk about the housing market and to get more building, more supply on the market. But what did you make of her plan?
Well, I think the plan is going to have the opposite effect of what they're hoping for. It would actually drive up prices of homes. I think that housing policy belongs at the local level because each market has a different dynamic. So some markets will need incentives for first-time buyers. Some markets will need support for down payments. Some markets will need a stimulus to help reduce the cost of housing. But you can't do it at the federal level, and that policy will just lead to increased prices. And $25,000 is not meaningful enough in the marketplace to make a difference on the positive side. And
I've heard that you offer $25,000, and then prices are going to go up by $25,000 because sellers know that added addendum is there for, the buyer. Let's talk about the jobs market, gentlemen. Thrust into the spotlight right before the election. We just got this latest report about jobs. It disappointed. We continue to see massive revisions in the jobs numbers. In August, it came in weaker than expected, only adding 142,000 jobs versus the estimated 160,000. Revisions were the big story. June and July showing 86,000 fewer jobs created than previously reported. So far this year, job gains have been revised lower by a total of 247,000. Adam Johnson says that bad employment numbers, high inflation will be negative for Kamala Harris's campaign. Here's what he told Maria on this show last week.
It absolutely matters for Kamala Harris. The reason being, there's this thing on Wall Street called the misery index, where you add inflation, CPI, plus the unemployment number. And if that goes above 7.3, historically since World War II, incumbents lose.
Rate sitting at 4.2% right now. How much of an impact do you think these numbers, Kevin, are going to have on the election?
Right. Well, I think that in some sense the Harris campaign will feel, after looking at last week's jobs numbers, that they probably dodged a bullet because I expected the number to be worse. I expected the unemployment rate to go up again. We're right at the precipice of the somnol area with the unemployment rate where people say, OK, we're in recession. A lot of people think the recession began in August, and we're expecting this number to show it. And so the fact that it came in a little below average, it'll be revised down. It wasn't a clear signal that we're in recession. And I think that that's absolutely politically salient, because if everybody were sure we were in a recession, then whoever's in the White House generally bears the electoral responsibility for that.
Well, yeah, that is the Biden-Harris administration. And, 24,000 government jobs were added in August. More than 20% of the total jobs added over the last year have been government jobs. Now, former President Trump is vowing to create this commission that's focused on making the government more economically efficient, cracking down on waste and abuse, a full audit of the federal government, basically. And he wants to put Elon Musk in charge of it. Don, a business guy. Your reaction?
Well, I think business people belong in government. I think our founding fathers had that in mind, where people served in the government after serving and excelling in the private sector and then leaving and going back to their businesses. And unfortunately, we now have a culture of career politicians. I believe that the government is the most inefficient operation in this country if you look at it at the state, local, county levels and the federal levels. And so President Trump, by taking this kind of initiative, should he be elected, he'll get significant reward for doing that. The government in this country is very inefficient. If you look at it, even these numbers are indicative of an inefficient government. A big thing is that these people need to come back to work in their offices. And I think that we can then get an assessment as to how few employees we really need to run our government.
And Kevin, we're sitting on $35 trillion in debt right now. Some say that we're at crisis levels.
Right. Well, it could turn into a crisis, but it won't if government comes in that takes this responsibility seriously and starts reducing the deficit. And I don't really see that from the Harris administration. They've got a lot of proposals for crazy tax hikes that would never pass. I don't think even a Democratic Senate, and then a huge amount of spending. They haven't talked anything really about reducing spending. And so my guess is that what happens is that markets begin to lose faith in America's commitment to its own debt, to paying its debt back if Harris is elected, and it could lead to a serious financial crisis. But I think if President Trump comes in, I've spoken with him about the matter himself, that it's going to be much more fiscally responsible. There'll be a reconciliation bill next year that returns the trajectory of the budget towards balance over 10 years. And so I think that there's a big change coming in financial markets depending on this election.
Well, we shall see. Kevin Hassett, Don Peebles, gentlemen, thank you so much for being here. Appreciate it.
Thank you.
Thank you.
Well, a disappointing jobs report ahead of the highly anticipated Federal Reserve meeting less than 2 weeks from now. Up next, Michael Kantrowitz on how this new data will affect the rate cut decision and the markets. And here is a look at where markets ended the shortened trading week as we begin a notoriously bad month for stocks. This after we got the pivotal August jobs report, as we mentioned earlier, showing much fewer jobs added than expected, while the unemployment rate remained in line. We also got revisions for July showing 25,000 fewer jobs added last month than what was originally reported. Only 89,000 were added. That is the lowest amount since December 2020. This is the last jobs report before the Federal Reserve meeting later this month. Joining me now with more on what this means for the markets, Piper Sandler Chief Investment Strategist Michael Kantrowitz. And this report again showed not just a weaker than expected number, but now we have all of these months of revisions. The only month that we didn't get revisions to the downside was February and March.
Yeah.
And we may see revisions for the number that we got on Friday.
Very likely. We really have to take some of the employment data with a grain of salt until we get those revisions. So the prior 2 months revisions combined were negative 89,000. So that certainly takes some of the excitement off of what we had gotten 2 months prior. So this report, I'd say, was a continued trend of softness underneath the surface. While the unemployment rate declined to 4.2, the establishment payroll data under the surface, again, I'd say were fairly weaker. We look at cyclical employment, so we exclude education and healthcare, and we remove the birth-death model, which has been a big piece of debate around how it's been overstating employment. That's now firmly negative at about negative 60,000. So, you go into recessions, the economy goes into a contraction because of cyclical activity. So when you strip out education and healthcare, we have negative
Which is
payrolls.
where the biggest, so look at this at the screen. That is the biggest jump, the 47,000 for the two that you're saying you're removing from your consideration. The other issue, too, is that, we had the surprising number with ADP, the weaker ADP report. JOLTS. That is showing another recessionary signal. I wouldn't say recession, but at the same time, this does lead to that weakening economy story that the Fed's going to have to consider. And this is the last report before they meet for their September meeting and make their decision. What are you saying now, and what is your prediction now for that?
So we've been bullish on equities, just to bring it back to markets for a second.
Sure.
Most of basically from October of last year, when markets sold off on the fear of higher rates. And so we turned bullish because we didn't think rates were going to continue to go up. We didn't think the Fed was going to hike anymore. And we thought we had this view we called softy locks, which was moderating economic data and moderating inflation. So there's a period, historically it happens, we've seen this the last 2 years, when bad news is good. That's always the case when we have an inflation problem or fear around that. And for much of this year, the softer data we've gotten for much of this year has been good for equities. I'd say that's over as of July. That ended because inflation is not a concern amongst investors anymore, nor should it be with the unemployment rate up and the data we're seeing in employment data. That's why the Fed has shifted, recognizing their mandate is far more balanced, with inflation no longer really a risk and unemployment a budding risk or employment softening. So I think the market's going to continue to waffle around and react to the data in terms of what we expect to see in terms of the Fed. But I think this report pushes us closer to 50, but not a slam dunk.
Well, so then what is your outlook for markets for the rest of the year? So there's 3 Fed meetings to go. We've got September, November, December. But besides the Fed, does this change how you approach investments or strategies for the market?
So in the July payrolls report, so a month ago, we turned neutral on equities, which, I know oftentimes analysts are really bullish or really bearish. I don't see a high conviction rationale for either of those right now. I'm no longer bullish because I don't think there's any more inflation fear or good news from lower interest rates or bad economic news. And I'm not quite bearish yet because I don't think the economy's collapsing. I think we're going to continue to moderate at this pace that we've seen. We don't have any major macro negative impulses. Oil's not spiking. Inflation or interest rates are certainly not spiking. So the lagged effect of Fed policy, which many have debated, is not really that powerful. I think part of that has to go to the point that there's been a lot of, obviously, federal spending. Oil prices haven't been high in 2 years. So the impact of interest rates is kind of taking its time on weighing in the economy and not causing it to collapse. So I think that's going to continue. So I don't think you want to be so negative yet.
Okay, good.
But
good.
Continue to focus. No,
we want to hear that. We want to hear that.
But the idea that the market's going to broaden out and go up a lot from here, I think is very unlikely. And so, with the Fed in our back pocket, I think investors will continue to believe that as long as we get data like this payrolls report, the Fed will have our back. That's not bearish. That's not super bullish. It's just kind of okay, we can kind of stay here.
We'll take that takes us to just kind of an easy feeling about the next month anyway, because September can be a worrisome month for the markets. All right. Michael Kantrowitz, it's great to see you.
Okay.
Thank you for being here on set with us. We appreciate it. All right. Well, we're going to stay with this jobs in America. More young people are skipping college to go straight into the workforce. At 23, one Gen Zer is now running his own landscaping business, raking in $1 million in revenue a year. You're going to hear from him next.
One sales technique or strategy I use is not necessarily swinging for big home runs every time. If I'm out on site and it's a $2,000 project, it's a $2,000 project. I'm typing that thing up and sending it out. I'm not going to try to get $2,500 out of it, all that kind of stuff. But you got to build your business like that.
They're being called the tool belt generation. We've been focusing on the jobs market this half hour, and a growing number of Gen Zers are skipping out on a college degree and joining the skilled labor workforce right out of high school. The average four-year tuition in 2023 for in-state public schools was over $45,000, with out-of-state costs jumping to well over $100,000. And that is encouraging some students opting for higher education to make a different choice. Enrollment in vocational training programs surged 16% last year. My next guest started working at the age of 12, mowing lawns, and has turned that into a booming business. With me now is CMG Landscaping founder and president Chase Gallagher. Chase, nice to see you.
Thank you for having me.
So talk about that moment that you made that decision to go vocational versus going for that four-year degree.
Yeah, so I got started in my business at 13. And so when I was graduating high school, I had my driver's license, obviously. And so my business was already kind of up and running. And I just looked at the numbers very simply and said, why would I stop making X amount of dollars profit per year and go into school, shut down my business, and then get in debt for something that's not really going to help me?
Was it hard for you to grow the business, deal with all the paperwork and the regulations, all the things that you have? I mean, the taxes, all that stuff. Was that a learning curve for you?
Yes, it still is. I'm wrapping up my taxes right now, but it was a huge learning curve. Lots of late nights, long days, but it's worth it.
Yeah, no, certainly. And plus, you're your own boss.
Right.
Best part, right?
Yeah. Or you got hundreds of bosses.
Either he's a tough boss or he's a nice boss. I don't know what you are. But.
Yeah.
So, there's essentially what we're seeing kind of right now with this talk about small businesses. So Kamala Harris is proposing these big changes for small businesses. This would have been you if you could take advantage of it. So she's pushing this $50,000 tax deduction for startup expenses, and she's vowing to cut red tape and regulations. Okay, you're a small business owner. What do you make of ideas like that? If you were starting out right now, would that help you?
If you just look at it generally, a $50,000 tax deduction is not really going to help a startup. Usually they don't have a tax bill to begin with for the first couple years, but it's probably just a reach to get more votes.
Probably so. Small business, though, is the engine of the economy. Now, you have employees, right?
Yes, ma'am.
Okay, how many do you have now?
10.
And when you were taking on each new employee, was that a good feeling? Did you feel that responsibility on your shoulders? I mean, what is it like? Because you're young.
Yeah, definitely a lot of responsibility. I take it very seriously, and it produces anxiety. You got to perform, sell, and your guys will do the work. So. That's what it is.
Yeah. No, it sounds like you really enjoy what you do, and,
yes.
and I'm sure you have a good group of guys that work with you and for you.
Really great team.
So, look, we haven't heard anything from the vice president yet, but President Biden, he's pushing hard for these student debt bailouts. He's been doing this for some time. So you chose not to spend thousands of dollars on student loans.
Right.
Same with me. I didn't take out loans. But how do you feel getting stuck with the bill as a taxpayer for other people's, student loan forgiveness, basically, and then they're canceling hundreds of billions of dollars now in loans?
Right.
Got a little frustrating, probably for you.
Most definitely. I took a risk as a small business owner in America, and so if they're going to pay, down someone's debt for a 4-year party, pay down one of my equipment loans or my mortgages,
Yeah. So. Do you feel that you get the support that you need from the government right now, whether it's the state government or the federal government? Is there things that you would want to see different?
Yeah, there's lots of things I probably would want to see different. I mean, my first thoughts about support, it's really the main support is me filing my taxes to pay them. So I don't know if that's support.
Yeah.
You know what I mean? So.
Taxes they're fun. Yeah. Well, it's very interesting to meet you, and congratulations on your success. And I'm glad that it's worked out so well for you.
I'm a blessed individual. Thank you.
Yeah, you bet. All right, Chase Gallagher, thank you so much. All right, I have got one important thing that you need to know ahead of next week. Welcome back. One thing you need to know ahead of next week, it's glow time for Apple. The tech giant expected to debut 4 new phones, including the iPhone 16, along with the next version of its Apple Watch and new AirPods at its highly anticipated event on Monday. The tagline could refer to redesigned Siri that makes the edges of an iPhone screen glow with a colorful effect when in use. Along with the hardware, Apple likely to unveil its Apple Intelligence AI platform, bringing new capabilities to many of its products. The knowledge-based system may work with ChatGPT and OpenAI to help users write emails, reports, text messages, and generate images. Shares of Apple up double digits this year. You want to keep it tuned to Fox Business Monday for all of the big headlines and moves in the stock price. And that'll do it for me. Thank you so much for joining us. Have a great weekend, and I'll see you next time.